Okay. All right, so let's look at this. This is bearish convergence. So for sale. This is bullish convergence for the buy. You only can have bullish divergence or bullish convergences at lows. You only can have bearish convergences or divergences at highs. Okay. The bearish, the adjective indicates this direction. All right. So the adjective indicates the direction. Not so much what's happening, but the adjective indicates where the price is going to go. So if we have this high here, and we look across to the high that is close to, which is this one. From here to here, it's going down. From here to here, it's going up. This is because where are we at? We're at highs. We're at highs. The angles from left to right, are they going to each other or away? They're going to each other. So that is, it's still bearish because it's at the high. You can't have bullish at highs. You cannot have bullish anything at highs. Okay. This is bearish convergence. All right. Look at the lows again. You go from here to there, and then you go from here to here. You can't really tell the difference, but it's bullish. Why? Because it's at the lows, from one low to another low. Even if it's the same from left to right, their ends are getting closer to each other. Bullish. Real simple. All right. Let's look at another one. And you will see how these things happen all the time. Understand that this point of view is one that takes time to learn. From left to right, they're getting closer to each other. This is what bearish convergence, which means price to sell. You should sell price here. Price does go down, and then we look. Like I said, it happens over and over again. Even at these markers, right? Something like this. You have this high, and then the previous high. All right, but then right beneath that, grab this point. This is going up. That's still bearish convergence. Still bearish. Then at the low, go from here to there. All right, and it can be a retest of the low on price action, but on the TDI, it's not a retest. It's a convergence because it's at the lows. It is a bullish convergence. All right, it's real simple. And divergence, you can't have a divergence of price if they're going away, and if they're coming to one another. The wordplay matters, right? It matters a lot. So, yeah. Let's see what else. And these are the ones that I've been liking to see. Things like this. You have this low here, this low here, the exact same low. 3 touches at the low, but then it goes straight across here. But then it goes from here down. Now, mind you, what did I say before? You can't have bullish anything. You can't have bullish anything at highs. These are not highs. These are low points. This is a low, and I know it's a low because price pushed higher every time. All right, this point is lower than the previous high, so these are not. This is bullish, right? Then you got the lows of the TDI. Yeah, this low, this low, this low, this low. The price stayed the same. It's telling you it's pushing up. Okay, Let's see if we can find another one. We got this high and this high, right? And then right under it, it's the exact opposite. Bullish divergence. Okay, going away from each other from left to right. Price drops. Here's another one that I like, and this is something that I've been training my eyes to see. This point, right? This point, if you look to the left, the closest low would be this one, right? So you have on the price action, it's a higher low, but on the TDI, it's a lower low. Is it bullish or bearish? Well, it's bullish because we're talking about lows, right? Is it divergence or convergence? It's divergence. Why? Because from left to right, the angle of these trend lines are going away from each other. All right, but you got the trade right, bullish. That's all that matters, bullish. All right, this helps to show you the exaggeration of the floor. These points that are lower on the TDI shows you the exaggeration of the floor. All right, even this, the exaggeration of the floor. Why would this be an exaggeration of the floor? Well, if this is the low and it retests into this next session and it's showing you a push up, it's under close to the Bollinger Band, then the next push down is even more dramatic, but price stays the same, probably even higher. And then the next push down is even more dramatic. It's showing you it's an exaggeration of this low. Now you will see the same thing with a high, when you have highs, an exaggeration of the highs. And that'll be for a downtrend, and we'll get to that when we get back into it. So here's another situation where we have this push down, but this is higher, right? If we go to the left of that, the closest low will be this one, right? If we just look at these, this point, here's up. Directly beneath it, we have this with that. That's a push down. How do you push price down? How do you push the RSI down, but the price goes up? It's showing you the exaggeration of the floor with respect to a previous actual low, right? It's more like the slingshot, you know. This is where it started at rest, and the pullback is the pressure or the resistance needed to push the price back up. Okay, and you'll see that on the downtrend as well once we get there. Here's one. Once you see it, you can't unsee it. The only thing you have to work on next is patience and figuring out a price point to where you can take advantage of these of this perspective without having to worry about a stop loss, without having to worry about over trading at all. You give yourself some time. All right, so look at this. Watch this. This is so cool. I mean, like, I love it. I love what you can see if you keep looking. You got this low and this low. At the same point in time, just go straight on down. You have this and this. Is this not an exaggeration of the low from left to right? It's bullish. Why? Because we have two low points. How do I know this is the low point? Where from this point, price pushed up. And from this point, price will push up because of where it is on the TDI. Right? This is definitely bullish convergence. Bullish, divergence. Where this one trade is profit. It don't matter how much it will. Now watch this. Here's another one. Watch this. Now, we get this in New York. We look to we had about an hour of time to make a decision on this trade. You look to the left. The closest low is here. Now, take that closest low and we draw a trend line to that point that we're trying to make a decision at. And we go down. Take the same point. This right here is an exaggeration of the low. Why would I say that? Because, like I said before, why would this floor be lower than the floor of the previous next lower low? Because they want to show how exaggerated this slingshot's going to be, right? If this is at rest, Like the initial point is the resting place, right? This initial point is the resting place. If this was a slingshot, bow and arrow, whatever, or a slingshot, and you're looking at it, this would be, I'll put this as the place of rest. This point is the pullback as to the strength of where it got to come back at least to this point in order for it to break even. And it just that price comes back up, comes close to the high. It actually makes a new high slightly, but the RSI goes above it to complete the resting place of this slingshot. All right, now this perspective is new, but I just want to give a different analogy so that you can understand. So let's look at this one. All right, so we have same thing. This could be technically, it could be an equal high or a little bit higher high. That same point in time is that. So you have bearish divergence. So you go from 1, 2, 3 trades, and these trades situations occur almost every day. If you just looking at the high, looking at a high, and looking to the left and seeing where the closest high is. Now, when you're looking for the closest high, you want to look for the closest high above it. When you're looking for the closest low, you want to look for the closest low at or beneath. All right, so let's do that. So we have not this one. We have this one, right? But then it keeps going up. So if we look at here, and we looked at the previous high will be this area here. And at that same point in time, we have going up. These are highs, so you can't have bullish anything at highs. And so this will be bearish, even with this push down, not falling for that, because even this situation is another bearish divergence. It's just quick, which if you were in here, you wouldn't have to, with the right risk management, you wouldn't have to worry about this pullback. All right, because it happened twice. And ultimately it still was bearish and it dropped down. Now we get to here. We look at this low. Look to the left, see what's the closest low. The next low will be this one. So from here to here, you have that. From here down, you have this, which is a more exaggerated low, right? Which means what? We can buy this. It's bearish. It's bullish. Bullish, anything buy related, going long, buy is from from lows. Anything going short or selling is from highs. All right, short selling, that's all bearish. Going long, that's all bullish. All right, so we never add adjectives that go against what we want to do or what the market is showing us. All right, so let's look at some more stuff. See if they give us anything here. They do, real close. Right, this is a low. You look to the left for the previous low. And you had about 30 minutes to an hour to play around with that. Then you go down. These are lows. So this is a bullish situation. All right. 133. All right, you bought that. Okay, and there you go to the next day. Really, the same day. We have this, a low and a higher low. And at the same point in time, I think you have equal lows on the TDI, which is still bearish. Goes up. Here's one for you. This is a cool thing. All right, this comes down, gives you that. The next closest low is this one. That right there. And then you got this, and it comes down to here. That is bullish. right? A very over exaggerated low. Ultimately, for the sake of it pulling up, this slingshot push way up, and then it does it again, right? You have a low here and a more exaggerated low here. I mean, all this was lower. I mean, this whole day. So from here to there, it stayed the same point in time, and went down, right? And most people would look at this and say, well, we got divergence. We got divergence at the highs. We wouldn't be looking for sell because we just had all this push to the top, right? So this would be obviously be a buy. Obviously be a buy. So these two trades are good. I mean, any profitable trade is good. So I don't want to bore you, but that's really it. That's my approach, and that's what I'll be doing. I mean, even with just looking at different markets, you'll see that across the board. So I'll post this to the page. Don't really have a particular title for this video, just really a perspective as to what to look for and how to use the TDI to get the high quality trades. So that's all for now. You guys have a great day.